Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report that is like a financial maze, and we're going to find our cheese at the center. Let's get started with this filing from United Rentals. This report focuses on a big change in how United Rentals is handling its debt. They've basically refinanced, getting a new and improved loan agreement. It's like trading in your old car for a newer model with better features and hopefully better terms. But let's dig in, because with loans you never know. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can discuss all things finance with other finance geeks. At the heart of this filing is news that United Rentals has entered into a fifth amended and restated credit agreement. This agreement is with a bunch of lenders, including Bank of America. It's essentially a massive loan package. The important point is that they have updated their existing credit line to get better or more flexible terms. This agreement provides United Rentals with what's called an asset-based loan facility, or ABL. This ABL facility comes out to a total of $4,500 million. That's 4 to a borrowing base. Think of a borrowing base as a credit limit based on the value of the company's assets. This is to ensure that the bank is not lending you more money than you have assets to cover, so a portion of the loan can be borrowed by subsidiaries in Canada, Europe and Australia, and New Zealand subsidiaries. The agreement also lets United Rentals increase the facility under certain conditions up to $2 billion. This new deal replaces the previous loan agreement, showing a possible need for more capital. There are a bunch of guarantees in place. Essentially, United Rentals and its US subsidiaries are guaranteeing each other's debts. It is also indicated here that both US and Canadian subsidiaries, with specific exceptions, are providing guarantees to borrowers under the laws of Canada, France, Australia, or New Zealand, depending on where the money is being borrowed. Everyone backing everyone. The loans are secured by pretty much all of United Rentals' assets. This means that if they can't pay back the loan, the lenders have first dibs on their stuff. This includes things like equipment, property, and even the stock they own in other companies. These assets are subject to certain exceptions as well. The loan matures in 2030, so they have some time before they need to fully repay it. As of July 9, 2025, they had a little over $2 billion drawn, with a little over $2.4 billion available for future borrowing before hitting their borrowing base limit. There are limits on how much can be borrowed in specific countries. Canada has a sublimit of $250 million for its revolving loans. The rest of the world gets another $125 million. For their revolving loans, there are also sublimits for swingline loans, which are like short-term, quick access funds, as well as for letters of credit. It should be noted that the terms of the agreement do allow for increases to these sublimits with approval. The interest rates on the loans are variable and depend on a few things. They are based on rates like term SOFR or daily SOFR, and Euribor plus a margin, which will usually be around 1 to 125%. There are also base rates involved, and the margins are subject to adjustments based on how much of the facility United Rentals is using. There is a fee of 0, where 0.2 based on how much of the facility United Rentals is using. There is a fee of ever 0.2%. There are also base rates involved, and the margins are subject to adjustments based on how much of the facility United Rentals is using. There is a fee of a 0.20% payable on the unused portion of the loan. United Rentals also agreed to pay routine letter of credit fees. The loan agreement has a bunch of rules that United Rentals needs to follow. This agreement limits their ability to take on more debt, make investments, sell assets, and merge with other companies. One thing this agreement does not have is financial covenants. However, it does include a springing covenant. This means if their availability falls below 10%, they will have to maintain a minimum fixed charge coverage ratio. To wrap things up, as these agreements tend to have, there are a couple extra documents that relate to security that were entered on the same day as the credit agreement. These mostly relate to how the loans are secured, and the security agreements are now for our take on United Rentals. United Rentals seems to be in a fairly strong position. Securing a massive $4.5 billion loan facility shows that lenders have confidence in them. The fact that they could negotiate some favorable terms, even with the limitations from the facility, is a positive sign. However, the amount of debt United Rentals is carrying is something to keep an eye on. They need to make sure they are using this money to grow the business and generate returns that are higher than the interest they are paying on the debt. Looking ahead, there are always risks and opportunities. The economy could slow down, which would hurt demand for their equipment rentals. On the other hand, infrastructure spending could pick up, which would be a major boost. Also, United Rentals still needs to effectively manage their debt and comply with the various restrictions that come with this loan agreement. In conclusion, United Rentals' latest move is a big one. While their direction seems positive, the debt level should be monitored by any potential investors. Alright, that's our breakdown of United Rentals' latest filing regarding their credit facility. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Also, don't forget to check out the Discord for off-video discussions. Thanks for watching. See you next time.